What's up, everyone? All right. Here we go. All right. If you can hear me, just type yes, no. One second, let everybody get in here. There we go. All right. Hope you guys have been making money. As the pullbacks last week, when we left off on Friday, this happened, right? And I told you not to chase. And guess who bought the dip, right? So the pullbacks always come. You just have to be patient. And this was a typical one way, then reversal, and then into the direction of the correct trend, right? So why did I buy this dip? It's because I'm a goddamn psychic. That's why. I know the direction where it's gonna have to go in the future. And how the fuck do I know that? Simple. Fundamentals. All right. Fundamental flow dictates where the money goes. Contrary to all the mumbo jumbo fucking YouTubers talking about super secret algorithms and all the other jerk of shit. It's all bullshit, all right? Old fucks who run this institutional investments, who are 70 years old, are not glued to their screens, all right? And they're not looking at for 1 minute charts to what's gonna happen, right? They're moving the total volume of forex market a day. It's somewhere between $5 to $7 trillion. Trillion with a T. You think anybody's watching any charts? The traders are watching the charts. But the majority of the flow happens because there are fundamental reasons for that flow to go somewhere. And key primary drivers of the funds are usually rate differentials, economics, how well the economy is doing, plus or minus, and safety of the assets. Okay, so those are the three primary things that will impact where the money goes. And I've been explaining to you ad nauseum, again, if you have one bank in Europe, one bank in the United States, the bank in the United States is paying you 0%, the bank in Europe is paying you 10%, where are you going to put your money? All else given, even, being equal, right? It's a no-brainer, right? If you answered yes because of zero, then you have a problem. You shouldn't be in this business, right? So that's the big macro picture, and the big macro picture on Friday, when the NFP happened, right? We first had the run up during NFPs. We had the run up, and then the reversal. So I bought this dip. I was watching 15 minutes. I saw the reversal candle. I bought this dip, and I wrote it up. That's it. It was very simple because there was no reason for this price to do this aside from manipulation. And this is very scary price action, right? This is why most novice traders, they're like, oh my god. And it's hard to buy the dip because it seems like, okay, this is finally the top, and I should have been short, and then, so they're not short, they're not long, they're not anywhere, right? And then they chase all the way up here when it's too late. Same thing with gold. How many people try to short here, and gold just keeps on rocking. One-way traffic. So all the idiots I see it being posted on all the various channels I'm in, they're like, okay, and now I'm short. They only post obviously when they do this, not the 5 fucking times they got stopped out, right? So be careful of people who show you that they're shorting a very strong uptrend market. Those people are not professional traders. Those people are hacks, all right? Because not a single fucking professional trader looking at this chart will be shorting gold. because the world is being disconnected. This is the most safe haven currency in the world, gold, because it's been around for thousands and thousands of years. So the track record is unbeatable, right? Versus $1, a pound, a euro, a feather, and whatever else, cattle that's been used to trade. The cow is not going to live forever. Gold will. 1,000-year-old gold is still the same 1,000-year-old gold. You know what I mean? It didn't add any, it didn't lose any, unless somebody shaved off a little bit of it. But it's the same, it maintains its property, right? So central banks for the last 3 years have been on the tear. Go on Google, type what were central banks doing with gold in the last 3 years. Go to ChatGPT, ask it right now, and you'll get an answer. Central banks were net buyers of gold in all of this time. So if central banks of all of the world, right, meanwhile telling you gold is for idiots, gold is this, gold is that, but meanwhile they themselves are buying, what should that tell you as a trader, right? They're telling you to, don't buy you because you're going to be dependent on them. Meanwhile, they buy all the shit, right? So why would you short when every single central bank on the planet is buying? Why? Just so you can say, I caught this top, I caught this, instead of catching this move. And it's not stopping. Yes, it can do a correction. You should be buying a correction. Why? Because the fucking trend is up. That's why. Right? Very fucking simple. Look at this chart. Does this look like this should be shorted? No fucking way. So when you see some jack off post anything on any Discord, any Telegram you're part of, if they're posting, follow my signals, I've been shorting this successfully, and that horseshit, bullshit, nonsense. Their track record, long-term track record, is a loser. Okay? Because they're doing the wrong action in the wrong market. In an uptrend market, you buy. In a short, when the market is selling off, that's when you sell. There's zero indication of this market selling off. Zero. Long-term trend, bam, accelerating. Because more and more people are following it in. It's like Bitcoin, right? It's the same jackoffs who are telling you to short gold are also the ones following it in. Yes, obviously this is super volatile, but again, every single time you get those pullbacks to buy your shit. All right. And just wait for the trend to change. And it looks like we are getting it with Bitcoin, by the way, right now. This is an inverted head and shoulders that is being played out right now. We're at the neckline, essentially, right? Just seeing it out of the blue. What is this? This is a reversal pattern. Low, lower low, then this low, and then we are minting higher lows and higher highs now. So with a neckline here. So let's see how this closes. Can we close above this 200? Average, moving average on an hour, on a 4 hour. If yes, then you buy a pullback, the next pullback when you see something like this. I'm not advocating trading actively Bitcoin because it's super volatile, and Bitcoin trading is for complete fucking retards. And I'm going to explain to you why it's for complete fucking retards. It's because every single exchange that exists, from Kraken to Coinbase to whatever, pick one, pick your favorite one. And every single one of them sees the books. They see where everybody sits in the Bitcoin order flow. And all they do is manipulate the price this way. And this is why you get these extreme moves in Bitcoin, because they push through. And in this case, the market is so small that it's exchanges versus retail. Retail still is a big part of crypto market, and they are not. They are basically there to extract your Bitcoin from you. They are hoarding it, and they have an advantage. They have more of it, so they can push the price, and they also know where all your orders sit. Your liquidation pools. So all they have to do is just push that price tip it over, grab that liquidity, and now they put it in their pocket. All right. With the forex, with gold, it's a different ball game. Their players are too big, and retail retail traders have a very small percentage of that equation. Very small. It's big players against big players, because it's not 45, 50 years ago when the retail was still big. Now it's just funds against funds against funds, banks against banks. All right, but with crypto, retail traders still control sizable chunk percentage of crypto market. So in these instances, you can be the manipulation is the percentage of manipulation is higher. Can you make money? Sure, you can make money, but why put you through that agony? Isn't it just easier to understand the rates are going down, the inflation probably will be heading back up? This is what happens since August, right? This is literally what happened. All of this move was me yelling in this fucking microphone to you that the Fed will be lowering interest rates, and in anticipation of lowering of interest rates, this price action will happen against the dollar, and this is exactly what's been happening. Been literally just talking ad nauseum, repeating this, right? So I'm just reading some comments. So yeah, can this be the top? Sure, it can be the fucking top. All right, I don't know. You won't know when the top comes in until it comes in, and you have a price action showing you that it's in, right? But for now, it's still up. So if the price is up, you trade up. Maybe, obviously, it's getting a little long in the tooth. Maybe you have to be more cautious, right? So you pick more conservative entries for your entries if you want to buy the dip, right? That's what I do personally. So now, the musical chair game has been ongoing for a while, right? So it's getting scarier and scarier when the music is about to stop and you might be left without a chair to sit on, right? So maybe in these instances you start, here you trade more aggressively, the initial stages. In the later stages of the move, you want to start picking key areas that are a little farther away. And this is exactly why I wasn't buying the breakout here, this breakout on Friday. I waited for my chance. I waited for my my chance literally came. That was the pullback. Most of you did not take advantage of it because you shed your pants, and that's it, right? But this was at extreme of the day. This was it went past the daily range, and it was a Friday, so the profit taking ensued after lunch, and this is what we got afterwards. So this was a pure bullshit move. All right. And that's why if you understand the fundamentals, it's not as easy. It's to wiggle you out of your trades. Also, it gives you more certainty. Not a single, right? Sorry, I'm just reading some Twitter. I gotta cover it up. Reading some tweets. Anyway. What do you do now? Again, this move is already we are overextended again. Can you buy here and chase it up to here? Sure you can, but that's a stupid fucking move, right? Wait for a pullback. These pullbacks happen all the time. Do you see how this 200 has been a perfect companion on the 4-hour chart? You just buy every single time it gets to it. So wait for the next time. It doesn't mean you have to buy it right now. Just wait for the dip, and then just buy the dip, right? All right, let's see what we got on our the calendar. So the big one, as you can see, the inflated core PPI, producer price index. That's what producers pay. The inflation of producers Came in lower than expected. So again, the fundamental picture remains the same. The Fed will have to cut. All right? The CPI is going to be the most important one this week at 8:30 a.m. on Thursday. That's going to be the big one. The core CPI and CPI. That's what Fed gauges the inflation mostly on. And if these numbers come in soft, boy oh boy, the markets will just rock and roll. So if you see dips happening before that, you have this information already. You know where the flow is going. And it's not easy to move trillions of dollars. Do you understand that? It's not like you pressing the button and I say, oh, trillion here, trillion there. No, it takes time. All right? It takes liquidity. You cannot just buy something that, an endless amount of something. Because if somebody has to be on the opposite side selling you that shit, right? You cannot buy 50% of Microsoft because you don't have people selling 50% of Microsoft for you to buy. You can accumulate little by little, but that's about it, right? Same thing with gold. There's just limited supply of it that you can buy, that you allocate anyway. So it takes time. These fundamental moves, they're like Titanics. Well, that's a shitty example. But it's like one of these cruise ships, right? They're very slow to maneuver. It's not a jet ski. It's not a speedboat, which can zip around. This is what you are on 1 hour, 4 hour, even daily charts. These are fucking huge boats. And the flow of by the time they turn around, it takes some time. And you can catch that. You can catch that time understanding basic macroeconomics. Basic macroeconomics. Right? I've been telling you ad nauseum as well. I traded dollar. This dollar move right here since COVID, when we started aggressively raising interest rates to combat inflation. Meanwhile, Europe was still sitting with their, finger up the nose. It was a layup trade. And it went on for about almost 2 years, a year and a half, whatever. Then same thing happened with gold, because once the Europe retards caught up to what's going on, the dollar obviously starts selling off because Europe started leveling out the interest rate. So the interest rate differential, the gap got closed down. So now the value of the dollar had to reflect that. So the euro and pound and Aussie, blah, 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 started going up again against the US dollar. But I didn't participate in this choppy fucking mess. Because now, after this fundamental move, it was obvious, okay, now we have a runaway inflation. So the gold was the gold which was sitting in this consolidation for years, all of a sudden started breaking out and started running. So this became the darling trade of the last three and a half years. Just buying gold. Because you have high inflation, and what's the biggest hedge against inflation? Right? It's gold. It's been since Kingdom Come. Even your grandparents know that. Your parents know that. They don't know anything about economics. But everybody knows to hoard the gold. Why? Because it's the old as the world itself. That's why. Right? So, no brain trade, and it's still happening. Why? Because the fundamentals haven't changed. Now, it's even getting more, it's accelerating again. Why? Because the US dollar value is plunging as Fed is preparing to cut interest rates. So the value of US dollar is going to the toilet compared to gold again. Because the amount of gold in the world is limited. The amount of dollars is not, it's unlimited. It's how much they decide to print. So again, you understanding these basic principles allows you to be successful in trading. And all you do then with your bullshit ICT or retard money or smart money or whatever the fuck you trade, classical technical analysis, is just find areas to get long into the direction of major flow. That's all you're doing. That's it. That's all of trading. You don't need to do anything else. It's not that fucking complicated. It's hard to execute. It's not complicated. Eating a salad when you're a fat fuck is not complicated. It's hard to execute, right? When you're a fat fuck eating cheeseburgers and pizzas all day long, the salad, you know, to eat the fucking salad is the answer. And go for a walk, go to the gym. Very easy, very simple fucking recipes to combat your fat ass. But I like chocolate because I'm fat, but I'm fat because I like chocolate, right? So what do you expect? You cannot be a fat fuck eating chocolate and expect to be rich, right? You have to do the right thing. So the right thing to do is go with the trend. So just find, oops, shit. Close the wrong window. 1 second. Sorry, guys. Oh, shit. Do I still have? Wait. 1 sec. What's this thing? Let me re-add. There we go. Oh. 1 second. Let me just close this and reopen 1 second. All right, give me 1 sec, and we will re-add the trading view. Anyway, I hope this, I'm being passionate with you for a reason. I'm trying to make you understand how to trade, all right? Yeah, I'm yelling here so it gets through your thick skulls. All right, let's see if you guys got some questions, because this is pretty self-explanatory. The audio keeps lagging. The video keeps lagging. 1 second. All right. Let me change the window. Trading view. All right, let's do some questions. Let's see some questions. One second. All right, let's do some questions. Gold and US stocks are both hitting all-time highs, even though they're usually moving opposite directions in this sign of possible use. No, they're moving. I'm not even gonna. I don't need to read the rest of this. The reason why the S&P stocks and gold are moving in the same direction is because it's not an S&P and gold move. It's a devaluation move of US dollar. So anything priced in US dollar that is a limited quantity versus unlimited US dollars will go up in price. So it doesn't matter whether you're looking at gold or you're looking at NASDAQ. It's the same. It's the same principle. The fundamental principle of it is the value of the dollar is just decreasing. So everything against it will go up in value. That's why. Next question. What's belief you hold today that your past self would disagree with? You know, beliefs in the trading is more of it's a very ongoing, continuous journey. So it's, okay, all right. I think the complexity belief. I think when everybody starts, the whole business of finance, they make it so complicated and so purposefully complicated, and that it becomes a little bit of mysterious, and it's overwhelming to understand. And once you understand that it's all bullshit, it's a lot easier to trade. All right? There's just few driving factors that you need to pay attention to as a trader that I've been outlining to you. Interest rates, the well-being of economies, and safety of assets. Right? If there is a coup going on in Mexico, the Mexican peso is going to go to shit. Right? So hence for the safety. If the Mexican government is solid, they have high interest rates, and the world is in a hunky-dory type of condition, then the US dollar is going to be going down because you can take more risk. Hence the terms risk on. So you chase those third world high yielders for your money. Because again, you're a pension fund, let's say. You need to take care of pensions for your city, the city of Chicago. You have, I don't know, $100 billion under management that need to make money because otherwise inflation will eat away at them, right? So they need to invest it. It's just not laying in a bank, rotten. So where are you going to invest it? You're going to invest it in United States, paying you 1%, or Mexico, small percentage. Obviously, I'm not saying a whole $100 billion goes there. But you go to emerging markets, right, which pay you 15%, and you gauge the safety of those assets. Because if everything is safe in the world, that's what the game was 5-10 years ago. Now the world is fucking getting discombobulated, so that's not the name of the game. So emerging markets are not doing so hot, right? Or they're not going to see as much flow. Now the name of the game is fucking safety. And what's the most safest place right now on earth? The only game in town. Europe is fucking useless, completely, the economy is a shot. They fucked themselves with that stupid shit, with Russia, right? Now they cannot compete with China, and they're done for. So why would you want to invest there? They're idiots. Asia is Asia, unless, it's closed off economies. China is China. It's not like you can just go buy, you can have a Chinese exposure. But again, if they decide to take your money away, what are you going to do? Write them a letter? No. So again, you have some exposure to those markets, but you're not going to hold the majority of those markets. So where do you hold it? In the motherfucking United States. That's why right now safety is being bought. Bought what? Gold is being bought and stocks are being bought, because if you want to make yield and be safe, United States stock market is still the place to be. Not the Chinese stock market, even though it started turning around. For the last couple of years, it was just going straight down. Let me show you. I'll just show you some proxies. Where's this? This is China last few years. Tech China. It's been selling off. Why? Whoever can answer right now, why China has been selling off in the last few years, gets an account. Right now, write your answers. You have 2 minutes, 1 minute. Write your answer. You'll get an account. Whoever writes it first. And I'll give you the right answer. Because if you are listening what I've been saying about fundamentals, you should know why China hasn't been doing so hot. I'm reading. Yeah, tension between okay. All right, Guta Mason. It's a simple answer, but I'll give it to you. The Guta Mason guy. You answered correctly. All right. It's because the pressures the United States start putting on China, right? It's a fundamental flow. They started seeing that the United States essentially enabled China to be China, because they have given them all their U.S. production went to China to save costs. But when you start making shit in China, one of the prerogatives or caveats of setting up a production in China is you have to transfer your intellectual property to them, so they know how to fuck you do what you do. So after doing it for 30 fucking years, they start, even a brain dead monkey can start doing repeat after you, right? After seeing all the patent after patent after patent, how to produce, they started noticing the patterns and started producing shit themselves more and more and more. And now all of their electric car manufacturing, they're better than Tesla, for example, right? So so when United States realized that, finally, they started pushing the production, U.S. companies, to produce outside the United States. That's why Apple iPhone production started shifting to India years ago, right? And markets have to reflect that data. They have to reflect the fact that the flow of money is being pulled out of China and it's going towards India. It's going towards Vietnam now, right? The manufacturing. So hence, the markets anticipated it, and they had to reflect that in the pricing of Chinese stocks. They got hammered. And maybe now they're actually worth picking up. I did trade Baidu, I did trade Alibaba, all those stocks, But yes, understanding fundamental flow allows you to set up a basic tenet of what the fuck is going on in the markets. And you can literally, you know where money is going to. If you know the direction, it doesn't matter where you enter. At the end of the day, if you hold long enough, you will be proven right? If you understand where the money is going. So understanding these major principles of macroeconomic views allows you to be ahead of the pack. And not just by support, resistance, this, that, or ECBC, fucking price inefficiency, or order blocks and shorter blocks. Has nothing to do with that. It will, the price, yes, then you use these technical things into the direction. When you buy the dip or you sell the rip, once you understand where the major flow is going, that's when you supplement it with technical analysis. And when you have an alignment of technical and fundamentals, that's when you get the fucking, that's when you get the juice. That's when you make fucking money. All right? All right. All right. Let's see. All right, I'll do a few more questions. Mucho Buchistan, what are your thoughts on mechanical trading versus trading with discretion? Trading with mechanical trading is essentially trading mechanically, algorithm trading, still it requires intervention, constant intervention. It's basically it helps a lot because it's emotionless, but it still needs tweaking and adjustment constantly. That's why all the PhDs in mathematics and PhDs get scoured by hedge funds and banks throughout the world and get imported to New York City for rocket scientists, etc. Be on call 24/7 at 3 o'clock in the morning. You better pick up the fucking phone and be in the office or log into the system and fix the shit. So you have an advantage having a discretion what to use and when to use it, right? First of all, you're not operating with trillions of dollars or billions or tens of billions. And second of all, you understand that even if you have a setup prior to, let's say, CPI news, maybe it's not a very good idea to take that trade, right? Whereas algo will take the trade no matter what without understanding the geopolitical environment that might have changed. Maybe tomorrow some World War III starts, and the markets do whatever they do. You might know, okay, maybe I should not enter, or maybe it's okay, this is a good setup, it's aligns with my views, I should enter because that happened. The algo will might enter into the opposite direction because it's still the reflection of that news is still not in the algo. So that's the difference between mechanical and discretionary. How do you deal with FOMO? Boy, I've been asked this question every single day. Maybe I should just I should get like on the stream deck, I should get a replay button of me explaining that it's the reason why I don't FOMO is because I got beaten with a fucking stick over my head. Don't do this, don't do this, don't do this by markets for so very long time that it's just not part of my nature anymore. It's it's an abusive relationship, but in a positive way. All right, meaning that the markets just removed that habit from me through pain. If it's like putting your hand on a hot stove, how many times you're gonna put it on a hot stove before you're like, okay, this is clearly a retarded thing to do, right? So at this point, I just don't do this. I know that if I'm patient, I will get the pullback. And I always get the pullbacks. All right? So I just get the fucking pullback. And again, look at this. I don't know how deep it will be, but if I see this price, so again, first of all, I have the, you see the, oh, I don't have, let me switch to the main. I don't know why my trading view is not showing what it needs to show. There we go, it's showing now. There we go. So look, for example, this NASDAQ, right? So this NASDAQ right here. On Friday, I got the pullback and I went long and I made money, right? Again, right now, what is this? People who were chasing. Just because the fundamental picture didn't change, so the trend is up, but for a day or two or three, the price can keep going down. Do you understand that? So when the fundamental picture hasn't changed, but the price does the opposite, all it is a pullback. For you, it's giving you a gift of opportunity to go long, right? So I'm here right now. I'm not looking to short. This price can go easily right here today. Can easily be here today. And I'm not shorting it because this looked like it's going to go down here as well. Double top, blah, blah, blah. This looked very fucking, reversal pattern. And didn't go anywhere, So I'm not going to be playing the reverse game here. All I am going to do is realize, okay, this is the 200 that it's respecting. There's also this is the outer limit for daily range right here and the outer limit for daily range right here. Plus, now you have a 200 coming in here and you have the previous, the triangle shit. So if I see a price here today, boy, oh boy, I'm just going to be happy. I'm going to be waiting for my reversal candle. And I'm going to wait for it to take off. That's it. That's a gift. So I'm not going to FOMO and buy, even though, and then sit through all this pain, and then it's going to go up. Because I've done that. And I don't want to sit through this pain. So I'd rather let the market shake out the bullshit than put in the reversal and say, okay, we're ready to continue, sir. Thank you, sir. Thank you, Mr. Market. And I go in. All I have to do is to be patient about it. And not be a jackass who is eager to rush into things. And that's the name of the game. You cannot be eager here. Because that's how you end up in trouble. Why only 2% make money while the rest lose money? Very simple, because why only 2% of artists are famous artists and the 98% are servers in Hollywood? Why are only 1% of basketball players are famous? Even though a lot of people can play fucking basketball. What about soccer players? What about football players? What about tennis players? A lot of people can play tennis. Not a lot of Djokovic's and Alcaraz's and whatever Federer is running around. It's the same principle. It's very fucking hard. If you want to be making unlimited amount of money, or lots of money, you at least in trading, you better be ready to do a lot of work and be better than most people. And most people don't have the discipline, don't have the desire. They just want to have a Lambo on Instagram. That's all they want. They don't want to do the work. So that's why they don't even listen to what I say most of the time. They just write some bullshit, this, that, blah, 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 whatever. It is what it is. They're not interested in learning. I know a lot of traders who make great content on YouTube, and they get pretty much no views. And these are like 20-year-old veteran traders who've been posting for decades on YouTube. And they get like 500 views, 1,000 views. And then some fucking schmo posts a video, how to make $3 quadrillion, I'll make you rich in 4.5 seconds tomorrow. And he gets 50,000 views. So what does this say about your level of intelligence as a human beings? You're idiots. So nobody would, and it's always been that way. Everybody's after easy money. They're not after hard work and making this a career. So somebody told them you can make a lot of money here. They come here, they blow through whatever savings they have and realize it's not as fucking difficult as easy as I was told to do. And then they fuck off and they try some other shit. And they try the drop shipping, they try to write an app, they dabble in everything. They're professional dabblers. And you need to pick one fucking thing and do it. Do it right. One thing, it doesn't matter. You want to be a janitor, clean, if you set up a janitor fucking company that cleans the floors the best. And every single company will hire you because you do the best job. Why the fuck am I going to hire somebody else? It doesn't matter what you do. As long as you just do it to the best of their ability, given your talents and the combination of things, right? Obviously, if you're bad at math, do not become an accountant, even though I know people who do that, right? If you don't have an artistic eye, you know, maybe you shouldn't be a painter or a musician, whatever, right? So you have to realize what you have to self-evaluate. You have to you have to have some self-reflection of your basic skill sets, and then look at combination of what they can be used for in this world to deliver value, right? All right. All right. All right. Well, what else? Let me do a few more. Do you trade to win or to avoid losing? Well, that's an excellent question, and I think I've answered that question via Warren Buffett's phrase, right? His saying, number one rule of trading is do not lose money. Number two rule of trading is see rule number one, right? So that answers your questions. Yes, it's about most novice traders will chase after profits. And that's why they completely blindsided when markets fuck them in the ass. So you first have to avoid the losses and mitigate risk. It's about risk management, not chasing of profits. Profits will take care of themselves when you mitigate the risk. All right. How do you design risk management that protects against short-term inflation shocks without killing the compounding power of long-term investing? Face, ping, drink, tea. How do you design a risk management that protects against short-term? You don't design. You create two different portfolios. You can offset investment, but what we're doing here is not investing. This is trading. So if you want to be an investor, your outlook is 5-10 years out, not 1 year. So you don't really give a shit about short-term market moves. Okay, you just hold forever, like Warren Buffett. And that's it. You call average hold is 5-10 years. He holds for 5 years, and then he sells off. You know, it doesn't matter what happens within these 5 years, because he bought it. You know, you buy stocks at the crash, you wait 5 years. Obviously, they're going to be higher than where they were. That's it. Rinse and repeat. That's how you buy low. I'm over the Kid before 7. Asian market is only time I'm new to trading. Is it good for me? What's your perspective? That's a tough one. Asian market sucks, you know, and if you that's the only time you have, that's you have to make do, you know. Jimi Hendrix learned how to trade. You know, he was a lefty. They didn't make lefty guitars back then, and or he couldn't afford one. The only thing he could find was the right, you know, the guitar that plays for righty. So what did he do? He turned it fucking upside down and learned how to play chords upside down. You make fucking do with cards you're dealt. Some people are born, you know, fucking in English royalties. Some people are born in India. Some people are born in whatever, right? We all, somebody's fat, somebody's short, somebody's tall, somebody's this, somebody's that. We are all dealt, you know, it's like characters in the game, right? Different skill sets. You make whatever skill sets you have work for you. Nobody is Mr. Perfect. Nobody. Few people get close. But, you know, genetic, you know, it's whatever, lotteries, very rarely. But majority of people have to make do with what they have. So if you have only Asian session to trade, then you develop a system that trades Asian session. Realizing that the Asian session is mostly low liquidity, low volume, and you're probably going to have more of a choppy session than a trending session, you design your trading system around that. Because obviously a lot of Asian banks, et cetera, still trade, still make money, and there's still money to be had. So like Jimi Hendrix, you make, you know, you make do. You learn how to dance during that time. It's because it's still possible. There's somebody who makes money during that at those hours. So is it ideal? Well, what is ideal, right? A lot of people, you know, we all don't get ideal environments all the time for us to, you know, otherwise it wouldn't take any effort to succeed, right? If your uncle would give you $1 billion again and again to just gamble and you know, trust fund baby lifestyle. Look at all the trust fund babies who have everything. They're miserable fucks on drugs and alcohol because they have no tension in their world. They have no growth to be had because they already have everything. So, you know, when you have kids and wife and blah 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 blah, you have to help them. This is, you know, the sweeter the victory will be when you crack the code. Because then you can write it in your memoirs. You can make a, you know, video how I had to fucking suffer, you know, and it was so difficult, and I powered through it. How many stories do we, you know? In fact, most people who are respected in this world are the ones who had to overcome things, those difficulties, all these complications, right? So I don't use VWAP. I prefer EMA. Yeah, I just didn't find VWAP to be working for me. I know I have a lot of traders who use it and they make money for them. Blah blah blah. It's the you know, it's been the rage for the last decade. Whatever. But I came from a forex world where there is no volume, so VWAP is essentially meaningless shit. All right, so trading forex, and because there is no centralized volume, you can use VWAP on the futures markets because futures markets are centralized, right? So that's a different ball, or stock market, for example, if you trade in stocks, day trading stocks, then yes, you can use VWAP. But I came from forex world, and to me, so I know how to use my moving averages. The way, you know, I mean, does it take a genius to see boom, 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 you know, boom, 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 you know, like how many times does it take a genius to see that there is a reaction off of those levels for you to take repeat? You see that there is a reversal candle, right? With a follow through, so the high is taken out. You put your stop loss here. Is there 1-to-1 here? Yes. There's your trade. Or here. Here's your trade. Or here. Whatever. Right? All right. Ladies and gentlemen, thank you for coming. I have other meetings to attend to. Let me see. I'll see you all tomorrow. What else? What EMAs do you use? I like 55 and 200. This is a 55 EMA, and this is either 200 smart SMA or, yeah, this is an SMA. So I like 200 SMA because on the daily, all the old timer fucks, they always look at the 200 daily. 200 daily is like the biggie in the for the old fucks. And if you're trading big institutional instruments, usually, that's like stock market, you will always hear on news, what happens during 200, right? So you can see that it usually gets respected in some way. All right, it's because it's been in this moving average has been around for 100 years already. So a lot of people watch it as an indicator. All right, good questions. Thank you all for coming. I'll see you all tomorrow. Trade safe, trade in the direction of the trend, stop pissing against the wind, stop being an idiot. All right? It's a lot easier to make money while trading with the trend. And on that positive note, wish you all, tomorrow is the big one. So watch for the calendar. Right? So tomorrow we have the CPI. That's the big one. And we'll see how we're trading then. All right. I'll see you all tomorrow at 9. Thank you all for coming. Cheers.